Gomez, leading economist, who will be joining us in November at our summit, November 13th, 14th. And we're going to have a little bit of conversation with you today, Carl, about what's going on economically. JG, say hi to Carl, by the way.
Hey, Carl, how are you, man?
Nice to meet you, virtually, of course.
Yeah, exactly. It's a pleasure. Listen, Patrick, I'm really excited about Carl for several reasons. Number one, lots of in-depth, experience as an economist, but also 20 plus years of business experience, and specifically in the real estate space. So Carl, I'm so excited about your opinion on this. Just before we started, we went live, guys. Just a little behind the scenes here. Patrick and Carl are getting pretty fired up about what's going on behind the scenes. So I'm hoping to recreate that.
Yeah. So Carl, it's great that you're joining us today, and that you'll be joining us at the summit. And for those of you who don't know Carl, like I say, he is a leading economist nationally and internationally for sure. And he was on the Everyday Millionaire podcast, episode 94. 94. So if you want to learn a lot more about Carl, and aside from being an economist and a business guy, he's a husband, he's a father, he's a musician, he's got a really, really interesting background, and he's done some pretty epic things. He's been on the Rain stage several times, and it's been always great to have Carl share with the audience and share with the Rain community just what's going on economically. And hey, so we've got a lot to talk about here today, so let's get to work. Carl, the summit, it's coming up November. We're looking at what's happening economically in the world today. What's just top of your head? What do you want to say? What's going on?
Well, does anybody really know, right? I mean, this is, it's a crazy time to be an economist, because all eyes are focused on you. Everybody's asking, well, what comes next? And really, as we were discussing before, everybody's crystal ball is very cloudy these days. It's all real time, it really takes its cue from this pandemic that we're all going through. I spoke to friends in, Japan, whether they're in Japan or the US or England. We're all in this, and it's really having an impact economically. Whether we're talking about fiscal policy, whether we're talking about employment, and whether we're talking about real estate, quite frankly. So it's a fascinating time. You can almost have to throw your economics books at the window, because we're also dealing with a health crisis. But yeah, it's crazy times for sure.
Well, listen, Carl, you talked about a cloudy ball, and you said something a while ago in our pre-meeting. You said, every day reveals a new playing card. I kind of feel like, we're playing poker, and every day, like you said, and as you play poker, as you know, folks, the more cards you see, the more options you have. So in this particular case, people are making predictions, people are making forecasts, and these forecasts started right all the way back. And I understand it's the job of an economist to do forecasts, whether they come true or not, that's just the job. But really, quite frankly, no one has the data up until now. Like, now we're starting to have enough data, and at the summit, we're going to be making real predictions and forecasts as to what's going to happen. But up until now, has it even been possible?
Well, if you go back all the way back to March, April, when this thing started, there were forecasts at the yin yang. And I would honestly say probably about 75% of them were wrong, because the reality is, economists use backwards looking data. They get the data that reflects maybe a month back, 2 months back. And that data becomes stale when you have a quick moving sort of situation like a pandemic that can change everything on a dime. We went through a first wave, we're going through a second wave now. In the US, they're going through a third wave. That's having meaningful implications on where the economy is going, where politics is going, where interest rate, just about everything, where our mental health is going. And so, when you have something like that that's moving things along, you can't use stale data. And that's where it gets really tricky as an economist, because you're put on the spot to kind of, mine out some sort of, where are we going from here from given that data. And man, it can change in a dime after. So it's fascinating, but it also makes, being there at the moment really important, because then as you get that data, we can say something about it at that point in time. Because I'm a data guy. It's all about the data.
I remember in the podcast, Carl, we talked about recovery, what it would look like, and I suggested it was going to be like a Nike swoosh. That's what I thought. I thought it's going to do a double fake and then do a slow Nike swoosh. But then who the hell came up with this? No, it's a K. It's it's a there's W's and there's cliffs, and then now there's a K. So my Nike swoosh looked okay until they added a K to it. I'm going, what the hell is a K? So there's so many things that are unfolding before us that, to your point, is like, it's never happened before. And we're also recognizing, I think, is that people in general all have their view of the world, so their reactions are changing. We don't know how anybody's going to react to a pandemic. We've never had one before. Well, we're starting to see how they're reacting to a pandemic, especially in the real estate world, because all of a sudden real estate, there's no bubble. Real estate's like killing it right now. Our economy's like full steam ahead in the world of real estate. What's your thoughts on that, Carl?
But to the letter comment, my daughter's in grade 1 and she's learning her alphabet, and like, well, you can be an economist now because all we're doing is talking about L's, V's, K's. That's where the world is. But the reality of the K thing, and I think it comes back to your point, Patrick. No one really knows, and we're all trying to make sense of this stuff. And so we're trying to fit an outcome to the facts that we're seeing. And so, in terms of recovery and things like that, the K doesn't surprise me because we were surprised that some sectors came out of this okay and are doing fine and other sectors aren't. And so you're trying to put a V, you're trying to put an L, now a K fits. I keep coming back down to this point. No one really knows where we're going to be. We know what we've gone through, and connecting those dots, to a letter shape, to take the analogy back to grade 1 is the tricky part. But, the thing that I will say is that, for lack of anything else, I mean, you said, people have their own personal feelings and biases, and that's fine. We're human, and that's what we do. We take our own personal experiences and we project, and that's fine. But in an environment like this, we have to just stand back a little bit more objectively and look to the experts, look to other people, and try and fit something together without overreacting to it. And that's going to be my approach, is to kind of say, let's stitch these together with some facts and reasonably come up with where things are going from here. And it's not an easy job, but it's also a fun job to do too.
Yeah, for sure.
Yeah, it's so interesting. You a couple comments there, Carl, I want to dig into. Number one, you talked about how the US going into the third wave, Canada's second wave, and how that's having meaningful impact. Actually, in July this year, you put a graph on your LinkedIn that referenced how Canada was returning to employment better or more effectively, efficiently than what the US was doing. That was in July. That was July, I think, 1st or July 10th, you posted that. So interesting how this second wave and third wave, how's that having an impact on returning to employment or returning to peak employment, I think is how you put it.
Yeah. It is interesting because Canada has done better in many ways at recovering the lost jobs that the US has. And part of this has to do, and we'll talk about this, is the fiscal response, the government policy response of enacting things, getting things done, putting money where it's needed. And then you see this thing coming back. Whereas, the healthcare response in the US caused another lockdown, which, 2 steps forward, 1 step back, you start getting that sort of situation in the US. So really at the end of the day, how quickly people come out of this thing really depends on a lot of moving parts with policy and fiscal responses and where things go. There are, obviously negative implications from how that's done and what, the pieces that we have to pick up in the future from that. But certainly from a Canadian perspective, what the data is showing is that Canada has done reasonably well at trying to come out of this. That's not so, when you look at employment, and I don't want to get too deep into this, but when you look into the employment picture in Canada, it is one area which kind of looks like a V-shaped recovery. But what I want to do is, again, look under the hood of that a little bit and get a good sense of what actually is happening there. Because on the surface, it looks like a V-shape, but there's some other stuff there. And certainly, Patrick and I were talking on the ground, when you're talking to people, you talk about V-shaped recoveries, that may not be the perception that a lot of people are feeling. So we want to get into that.
I think there's a couple things that, I don't want to go on too many topics, but there's 2 things that I want to, talk about or shine a light on. And we'll talk more about the summit. Number one, the summit on November 13th, 14th, we very, very intentionally set that date because we wanted to see what was going to happen given the US election, the upcoming US election. And, that will give us a lot more kind of information, I think, that will just feed, the thought process about what's happening in the real estate world for investors and even for homeowners. That's the first part of it. The second part of it, or another part of it that I think we have to pay attention to is the emotionality that's going into the real estate market right now. There's lots of FOMO, there's lots of people worried about, prices are going to go through the roof, whatever, but they're really emotional decisions that are based on fear. Lots of fear-based decisions, buying decisions, investing decisions, and selling decisions. So I know those are two separate topics, but and I know we're going to talk a lot more about it at the summit, but what are you seeing in that space, Carl?
Yeah, I mean, real estate to me is one of the most interesting areas. I mean, it is my background. It's where I've worked, but watching the response of where housing markets, for the most part across the country have kind of gone is a very surprising sort of situation. Because if we, dial the clock back and we're, middle of March, everybody was saying, okay, well, this is it, time's up. This is when it's going to knock things down. And certainly early on when people were out, we saw that. And then all of a sudden we had this massive recovery happening, things started to go back to normal, if not, lights on, houses on fire kind of thing, literally knock the lights out. Nobody expected that kind of recovery either. So we've kind of got this dichotomy of things that are happening in the housing market. And I think, now that we've kind of gone through this initial situation and we're starting to go into the longer run sort of scenario, the question is, where do we go from here with that? And I have some observations. I'm not saying they're the right ones or not, but when we look at some fundamentals and things like that, the rear view mirror is not necessarily where we're driving to, and that's what I want to kind of get to when we talk about it. As far as the elections go, yeah, I mean, this is a pivotal event not only for the United States but for Canada, the rest of the world. I think we're all looking at this when we're all trying to figure out what's going to happen. I'm reticent to throw up predictions after everybody was wrong in 2015, 2016. But you never know. I mean, that's the beauty of elections in the States.
Well, we don't. I think the thing is, we got nothing to compare to. Our central bank and our federal government is doing things they've never done before, not to this degree. At some point, maybe we'll save it for the summit, but I'd like to get your feedback on what you think, central bank is and, buying mortgages and all the money that they're investing into mortgages and now pulling the plug on that. And what do you think the impact will be on that? I don't know. Do you want to talk about a little bit about today, or do you want to say?
You can dig in a little bit. We come back to this common theme of nobody really knows, and neither do the central banks. I mean, they're engaging in a huge monetary experiment that only a few people did right out of the financial crisis back in 2008, 2009. Quantitative easing in practice is basically moving up the yield curve and buying securities to help support liquidity in the marketplace. They have done that. They've been able to improve liquidity, and quite frankly, that liquidity is driving asset prices, not only real estate but stocks and everything else. It's trying to get the business side of the equation going, and businesses are certainly, at least from a capital market side, actually actively investing in things like that. How this unwinds, though, the Fed was trying to, you have to expand your balance sheet and print money, and the Fed, after the financial crisis, had to bring that down. You don't do that after a while. You create rampant inflation in the broader economy. And I think that's going to be something, these decisions that we've made today and what it means for the future are going to be big things that, the Bank of Canada is looking at, the federal government's looking at. And I do think, when you're opening up your balance sheet that much, there's going to be implications in the long term.
I think one of the interesting facts here, Carl, and you talked about this in July a little bit, which is you were showing some concern between the disconnect between equities and the growth and what's happening in the real market and equities. And this was in July. And at that time, the real estate market was relatively, call it on pause, if you will, but since then has really accelerated. So one of the things I know that we want to dig into, and today's not the day for it, but at the summit, we're going to dig into this, is really get your thoughts on whether or not that cause for concern is happening in real estate too, because it's definitely happening in the equities market. You along with lots of other people are saying this, But is it also happening in real estate is a question that I think a lot of investors want to know the answer to.
Yeah, I think we could definitely look into it. I've spent some time looking at the Canadian REIT sector as a bit of an indicator of real estate conditions. And one thing I can say about the REIT sector, which may be different in some ways, is that their performance has lagged the broader market. And so some investors, because of long wave changes like working from home, problems for renters in the rental market and losing their jobs, and obviously the decimation that's happening in bricks and mortar retail have impacted the REITs to the extent that they haven't risen up with the rest of the market. But then when we go back directly to asset prices and you come back to single family homes in Toronto or Vancouver, it's like there's no recession at all. I mean, prices are just going up, like a hockey stick. So there are so many of these disconnects, and I do want to kind of get into it and what's driving things there. I will say pent-up demand is a very big concept and an important concept to cover. And one other thing that I think nobody does an adequate job about talking about is supply, and the ability to bring new supply on when demand is growing has been a very big problem. I was talking to a couple of friends recently in the US where they don't have a problem bringing in supply when they need it, but the onerous sort of environment here to getting things done as a developer means that supply has perennially lagged demand in some of these bigger markets. And so, we think about demand as being a driver, but supply is also an important driver. So I want to talk a little bit about that too.
And now you're getting into the real facts, because these words of pent up demand, they get thrown around. And that's pretty much a label that can be applied to just about anything you can't explain. Oh, it must be pent up demand. Slap that label on it. But as an investor, if you're slapping labels like pent up demand on anything and everything you can't explain, you're cruising for a bruising in my
Fair enough.
So you need to dig behind you need to dig behind and really get into the economic fundamentals. And that's what's going to be happening at Summit as you take the stage, Todd Hirsch takes the stage. We're doing our fearless prediction segment. So we're diving deep here, Carl.
Yeah, absolutely. And, again, and not to make light of the statement pent up demand, but I don't even know exactly what that means. Is demand supposed to be level, like, continuous forever? And so, if there's some sort of missed area of opportunity, it just has to be made back. So those are the kind of things that I really want to look at. And I do want to open up, as opposed to just getting into demand drivers, also talk about supply. My career in real estate has always been really, when I look at cycles and things that have happened in real estate, supply is the thing that really matters at the end of the day. It's the one thing that actually changes cycles more so than demand in some ways in the real estate market. So really want to look at that.
Yeah, and I love that conversation because supply is a big issue today, because developers aside, new builds aside, you've got a market of individuals who are wanting to move into the suburbs, and certainly even urban, is seeing a huge shift in demand. And the reality of it is that the people that were already, the individuals that were already, or the families that were already living in suburban, they're going, I'm moving. Like I'm so glad that I'm here now. Those that were maybe considering a condo went, no way I'm moving to a condo. And then everybody who owns a condo is going, I got to get the hell out of town and I got to get into a suburban area. So supply is an interesting conversation to be had when you got the resale market that's going, I'm not moving. Some of them will try and get into a bigger space. But then the demand is from those individuals that aren't in a home right now, and they need more space. So it is such a dynamic that's difficult to read and assess, and there's limited data on how we look at the world. But as real estate investors, we can't get into the emotions of what's happening today. We have to be able to look into the future, and that's what we're going to be doing in November.
Well, and I think Carl said it absolutely best, which is, you can't be making decisions from the rearview mirror, because that's not where you're heading. So, and that's where too many people spend too much time looking in the rearview mirror, looking at all that stuff, and not looking into the future, Patrick. You're absolutely right. So Carl, we'll let you wrap this up and give us sort of one final thought to really get people excited about the summit, because it is a momentous event. I mean, it is the last time we did a summit, it was right at the beginning, essentially, of COVID in May. And boy, did we help our investors. I mean, the entire community was guided. And as RAIN members, they benefited immensely from the guidance we gave them in early May to get through COVID. But now that we're on the other side of that wave, listen to that language very specifically, folks. Now that we're on the other side of that wave, this is going to be the next big event to really get everyone together. So, Carl, lead us into that in terms of why you think people should attend.
Well, I think exactly to that point, we've come out of something that is historic, massive. It's changed the way we live and work and, play. So we've got some data points around that now, and we've kind of lived with that experience. One of the great things about doing something at the end of the year is it allows you to start, encapsulating all these sort of things and start looking at the new year as an opportunity or, a place where we can kind of pick things up and start again. Pandemic or no pandemic, that's always what we usually do in November and December. So, that's what we're hoping, I can kind of lend some light on is, where are we going in 2021? Is this the year that we go back to some sort of normal, or is it a new normal, or, where do we go? And like I said, I don't have a clear crystal ball at all, but, if with the benefit of some data and some, some of the personal experiences and experiences we've seen in the market, and try and connect some of those dots, it might turn into a K, they might turn into a V, they might be an L, but, we're at least we're trying, right? So.
I guess my Nike swoosh is off the table.
What I'm hearing, Patrick, what I'm hearing, Carl, is that you really need to know your alphabet if you're going to come to Summit. I mean, that's
I have a daughter in grade 1. We're working on it every day.
Prerequisite. Okay, well, thank you so much, Carl Gomez. Absolutely awesome to have you. Can't wait to share the stage with you at the Real Estate Investment Network Summit. Patrick, thank you so much for doing this, and we'll see you both at the summit.
Thanks, guys.
Thanks a lot.